Welcome to the story of the GameStop short squeeze, a moment when retail investors took on the titans of Wall Street. The GameStop phenomenon captured the world's attention, becoming a symbol of market disruption and the power of online communities. At its core, the GameStop short squeeze was a dramatic surge in the stock price of GameStop, driven by retail investors against major institutional short sellers. The battle pitted retail investors, mainly from the subreddit WallStreetBets, against powerful hedge funds who had bet heavily against GameStop's stock. The stage was set by the online community WallStreetBets and the practice of short selling, which laid the foundation for the explosive event. Short selling involves borrowing shares to sell immediately, hoping to buy them back later at a lower price for a profit. However, the risk is unlimited if the price rises. GameStop, a struggling retail video game store, had a declining stock price and unusually high short interest, making it a prime target for a short squeeze. The subreddit WallStreetBets became the rallying point, organizing a concerted effort to buy GameStop stock and squeeze the short sellers. The collective action of the retail investors quickly escalated into a full-blown short squeeze, catching Wall Street off guard. As thousands of small investors piled into GameStop stock, the massive coordinated buying pressure drove the price sky high. Hedge funds, facing huge losses, were forced to buy back shares to cover their shorts, which ironically pushed the stock price even higher. The stock hit unprecedented levels, showcasing massive volatility and a temporary inversion of typical market power dynamics. Once the dust settled, the consequences of the short squeeze began to ripple through the financial world. Amid the chaos, several brokerage firms restricted trading of GameStop stock, leading to public outcry and accusations of market manipulation. Hedge funds, particularly those heavily shorted, suffered substantial financial losses, forcing some to restructure or seek bailouts. The event drew significant regulatory scrutiny, leading to congressional hearings on market structure, short selling, and the role of social media in finance. The GameStop saga was a remarkable demonstration of collective power in modern finance, challenging the established order. The legacy of the squeeze is often seen as the democratization of finance, proving that small investors can impact large financial institutions. The long-term impact continues to unfold, affecting market transparency, investor behavior, and regulatory frameworks worldwide.